As we speak, Bitcoin is very close to a new all-time record high. How can we find an exposure to this? Well, one way is to look for proxies. Now, I came across a company a short while ago listed on the Aquis exchange called KR1, which I think is a fascinating story. And I wanted to go into some more details. So we caught up with the chief executive who joins us now. He's the founder of the business. In fact, he's managing director and co-founder of KR1. It's George McDonagh who joins us on the line. George, thanks indeed for your time. Look, this is a fascinating story. It took me a while to read through it and get a sort of a line to what is essentially a sort of new economy and new tech sort of business and how you work. I want to go back to the point at which you started the business, if I can, and ask you why you started it, how you sort of set out, and where you've arrived today, the sort of journey you've taken as a listed business. Give some more details.
Sure. So we started in 2016, and the idea was to give people access to the crypto economy via a listed share. There was a lot of interest at the time, obviously in Bitcoin and Ethereum had just launched, but it's a difficult technology to fully grasp and understand. And so what we decided to do was, we do the investing, we do the due diligence and the research as an investment company, and then obviously as a public stock on the Aquis, people can buy the share and sort of gain access to the emerging Web3 economy.
Yeah. I want to take a little bit from your website. A digital asset investment business focused on decentralized and open source blockchain networks. Now, I'm not an interested investor in this business, but certainly in the space. I'm getting to understand this space. But I want you to explain a bit more about what I've just said and
Sure.
what you're offering shareholders here. It is quite a complicated area, certainly to people that understand old economy type stocks. Getting into this new economy is quite difficult.
So Bitcoin was invented by a mysterious person called Satoshi Nakamoto. And effectively what Satoshi invented was digital scarcity, the ability for something in the digital realm to be scarce. And Bitcoin was the first use case for that. Then in 2016, the Ethereum team created another type of platform using those elements that Bitcoin had. And that platform created decentralized applications. Now, as part of, when I say decentralized, there's no sort of central actor. And in order for them to work, you have to have an asset of value that moves around the system, that aligns the participants, essentially. And that's what Bitcoin is. So, Bitcoin miners plug in their mining machines for a Bitcoin reward. And that's how the economy works. And so when I say we buy digital assets, what we're doing is we're buying those units of value that move around decentralized applications. So there's, at the moment, a lot of these applications are very sort of finance focused. People want to buy and sell and swap some of these assets. A lot of these blockchains are very slow, so a lot of the applications need to improve the technology. So what KR1 does is we look across the array of projects out there that are trying to improve this ecosystem and add to it, and we will invest capital into those young companies. And we will, instead of taking equity, we take their digital asset, of which there's a sort of scarce amount. And if that application becomes really popular, the buy pressure on that token goes up because they need it in order for the network to function and for them to use the network. And so if we invest early and the project does really well, then the digital assets that we bought go up in value. And because we're a long-term investor, we can hold those assets for a long period of time until that project really comes to fruition. And then we sell some of those back to the market at a particular time, and then we reinvest those profits into new companies.
So would you call yourself a growth investment or an income investment, or is it a mix of the two?
It's a mix of the two. So Bitcoin runs on proof of work, which is sort of the underlying system, and then the rest of the digital asset world runs on proof of stake, and they're designed for the different use cases. Bitcoin's very much digital gold, or a store of value, as well as a medium of exchange, but that's sort of more emerging. And the digital asset space runs on similar rails, but does different things, so requires different metrics in terms of how these digital assets work. And in the proof of stake world, you get a yield from those digital assets in return for securing those networks through the proof of stake mechanism. Ethereum moved from proof of work to proof of stake, and in so doing, people who held Ethereum can then start getting a yield on that holding if they lock it up in the network and secure the network. So KR1 has we pioneered investing in proof of stake networks in 2017, so that our portfolio is has some very I would say sort of pillars of the proof of stake ecosystem there, and so we get a significant income into the company, which we can then repurpose back into new investments. So it's both, essentially. It's both capital growth in terms of the assets, and we get a yield on the portfolio.
Okay, let's bring up a share price chart going back to beginning of 2020, where we saw this big rise up. Since then, we are off the highs, but in fact, this vertical red line was the point last year in June, which I wanted to reference because that was the last set of numbers that I see that's on your website. Since then, the net asset value has more than doubled. Now, the share price then was what, 35p? It's now 107.51. A lot of extra value has been priced in. What's been behind this rise in NAV?
Well, the crypto markets are quite cyclical. There is this element in the Bitcoin code called the halving, where the amount of Bitcoin that enters the market is essentially halved algorithmically every 4 years, which gives it this very sort of cyclical nature. And as we invest in assets and the market is very interested in those assets, the price moves accordingly. And what's basically happened is Bitcoin has grown up and had become part of the more traditional economy through these ETFs in the States. And Bitcoin is very much the bellwether of this space. A lot of the digital assets follow in its wake. And so when that happened, clearly there's a lot of buy pressure happening at the moment for that scarce asset, and that creates a lot of interest. And we're a digital asset investment company. Bitcoin is obviously of huge interest to us, but people who want direct exposure to Bitcoin can do it in a myriad of different ways. What we provide is access to very early stage digital assets that haven't really sort of come on the market yet. And so we have a sort of 2 to 3 year, view out into the future, investing into the sort of the picks and shovels of this emerging ecosystem. And so, although the price of Bitcoin goes up and a lot of interest comes, our hope is obviously that one of these very young projects that we invested in very early, that the possible growth of that, should, outpace the growth of Bitcoin, should we say, because of how early we got in. And that's really what we're offering shareholders is access to that very nascent area of the economy that's incredibly hard to navigate.
Yeah, look, in my research, I've been looking through the documents on your releases. Your most recent NAV release talks about, you break down all of the exposure and the percentage of portfolio that you have in your assets. Just talk us through some of these. I won't ask you to go into details. I see the biggest is Celestia at 43.9%, Lido, Polkadot, Cosmos. Should we know more about these, or don't we have to know about these to understand KR1?
No, these are central to who we are as a company. So some of these projects we invested in, and so Cosmos, for example, we invested in 2017, and has become a major part of the digital asset ecosystem. Celestia was a much more recent investment, and the percentages of the portfolio change depending on how well these assets do. So before Celestia launched, Polkadot was our largest holding. Lido was a very large holding, and they still are. But obviously, the success of Celestia has been so extraordinary that it's taken up that large area of the portfolio. But obviously, we try to balance things as we can, but at the moment we're vested with Celestia, so we can't. They all do different things in these ecosystems. Celestia is all about scaling. It's all about allowing these blockchains to process more information quicker. And one of the problems we have, I don't know if you know, but people are trying to do transactions on Ethereum, and it can cost upwards of $30-40 to do a sort of simple transaction, which is, let's face it, not what this stuff was designed for. But the problem is it's so popular, these networks, that you have to pay to get your transaction through. Things like Celestia offer a different way of building blockchains that allow that problem to go away. And so what's the value of that? Well, the market's deciding, and we invested 3 years ago $75,000, and that's obviously worth a lot more now. And that's really what we do. We find these people who want to build these technologies, and we help them.
Yeah, you talk about one of your holdings here in Cosmos going back to 2017. Doesn't sound like you have much churn. As an asset manager, do you look for opportunities all the time, or are you happy with what you've got and how things are growing? Is there a churn at some parts of the portfolio?
So it's always evolving. When we started KR1, we knew we needed to build a quality portfolio of assets that were going to stay the course. I don't need to explain to you or any viewers that crypto is a spectrum of projects, from very interesting, very technical stuff all the way through to dog with hats. And everything in between. And so what our core focus was to build a portfolio for the long term. I think, as you said, some of those assets are there, and they're core sort of pillars of the portfolio, and they're still doing very well, which is fantastic. As we grow, and as the size of the company grows, of course the focus does change somewhat. There's probably, you start looking more at Series A, Series B investments. Not to say that seed would stop, but you need to write bigger checks in order to move the dial more. That's just part of a company that's growing. So we are always actively investing. We're always looking at new projects, but the shift in focus is more probably towards sort of larger checks and projects that are firmly in the sort of proof of stake area, that have a yield to them, that fit into the portfolio alongside some of the other projects.
Yeah, look, time's almost beaten us. In fact, you've partly answered my last question, was about where the company's going to go and what's occupying your time at the moment. What do you have in terms of plans for the rest of 2024 and into the future, which seems to be moving very fast in the digital environment?
Well, there's three areas that we concentrate on. There's the investment pipeline projects coming through that we need to look at, we need to assess and allocate capital if we so decide. Then there's the current portfolio and what that's doing, and the yield that's coming from that, how we manage the yield, and then there's the company side of things, our public listing, and how to grow the company and steer the company in a way that's good for shareholders. And those are the three things that we will concentrate on going into 2024. Crypto and Bitcoin will do what it does. I think we're in a very exciting part of the cycle, and we will do our best to make sure that we make the most of the next 12 to 18 months.
Yeah. One final question has to be about the next thing for Bitcoin. There's a halving coming up. How important is that to someone in this space?
It's quite simple, really. It's a supply shock, right? So the amount of Bitcoin, so miners mine the Bitcoin, the miners have to pay for their electricity, so the Bitcoin comes onto the market. And then, so we have a supply shock coming up. we currently also have a demand shock happening, which hasn't previously been there. The ETFs are buying 10 times as much Bitcoin as coming on the market per day. And that's why we've seen this gigantic rally. So, there's no, I think it is a supply and demand thing. I also think, there is something to be said for the fact that it's an election year, and election years are usually quite strong for risk assets. So I think there's three things to think about, and clearly the market's thinking about it.
Look, George, we'll have to leave it there, but thank you so much indeed for joining us, and indeed for that last answer, which I think is fascinating and describes exactly what's going on so well. But look, it's a fascinating story, and when you're passing London, be good to catch up with you and do a face-to-face interview so we can get some more information about what's happening at KR1. Fascinating story. Thanks indeed for your time.
Not at all, thank you.
That's George McDonagh. He's the managing director and co-founder of KR1, the Aquis listed company which is so exposed to the new economy.